Hi, Jonathan York by Financial Partners, looking at investment markets. Welcome back to the new year in 2021. Really quite interesting, obviously, with developments in the US after the riots last week on Capitol Hill and the storming of Congress. President Trump has still refused to take any responsibility for that, claiming that everything he did was fine, he didn't incite any riot, etc., etc. But really what is quite interesting is that many Republicans have now sort of said enough is enough, and they're starting to distance themselves from President Trump. Obviously, most noticeably would be Lindsey Graham and Mitch McConnell. So against that backdrop, you've got obviously the inauguration now with President Biden taking place in just over a week's time. President Trump still hasn't issued any concession speech, still has conceded defeat, still trying to challenge at every sort of angle. The latest attempt was thrown out by the Supreme Court. And that comes on the back of President Trump after the riot sort of saying that now he's working towards an orderly transition towards the Biden administration. So on the back of the riots and the part played by the president, he's now facing a second impeachment hearing. He will be the only president in US history to be impeached twice. And really, certainly the Republicans are now sort of laying the blame firmly at his door for the loss of the Senate as well. Because the runoff in Georgia, the Democrats won both of those, so then they now have control of the Senate. So they now control the Senate, the House, and obviously also the presidency. So on the back of that going forward, potentially now it's a lot easier for President Biden to be able to get his policies through, having a majority, say, in the House and the Senate, and it'll just be very interesting to see how that sort of plays through. Because clearly the major one issue at the moment is still COVID, getting the vaccines running out and keeping the economy moving along. And what was quite interesting was the unemployment data for December was really pretty poor, was down. Most people are expecting a little bit of an up move, but obviously with the COVID lockdown and sort of closing down, partial closing down of various states, those numbers were down. They were down 140,000 on the non-farm payrolls. But what that does point to potentially is a further sort of round of stimulus package going through and a little bit of further boost to the economy. Also, as well, hopefully the Biden administration will be slightly more effective at getting the vaccine rolled out. Despite what President Trump said in his Operation Warp Speed, that's really been a pretty poor performance so far. But on the back of that, you've seen the stock market setting record highs. It's really quite interesting. Some of these big corporates, just as a sort of sidebar, Apple have enough cash on their balance sheet to be able to give every American $650. That's sort of quite interesting because obviously the initial sort of second round of stimulus package payout was going to be $600 to each individual in America. So going forward, consensus is for still a further up move in the US share market. That also impact on global share markets. It's going to be a little bit of a rocky road, I suspect, for the first quarter. But once that vaccine does get sort of rolled out, the economy does get back to sort of moving at a slightly more sort of normal pace with sort of reopenings, etc., because of the vaccines. Then potentially the economy should pick up and should look to move in a positive direction. Now on the back of that, oil is obviously traded much higher. It's comfortably above $50 a barrel now. Interesting, the UK is doing it pretty tough. They're in sort of tier 4 at the moment, but potentially talking about a potential tier 5 out there, really to try and get on top of this virus. Closer to home, there's a little bit of a spike in cases in Australia as well. Certainly Queensland, Brisbane, they went into a sort of a partial 3-day lockdown to try and get on top of this virus. It's really the new strain that seems to be able to transfer much more quickly, and it's much more sort of virulent once it gets out in the community. But again, the data coming out of Australia is really pretty encouraging. So a big spike in retail sales. That was really on the back of Victoria sort of reopening, and certainly Melbourne as well. Here in New Zealand, a lot of pressure on the government to sort of really tighten up the borders even further. Even some talk about closing the borders completely for incoming passengers. Because while New Zealand doesn't have any cases in the community, all the cases are in managed isolation. It's only got to get out once, and if potentially this new strain, once it does get out into the community, it does really spread very quickly. Reserve Bank under a little bit of pressure as well. There's a potential sort of hack on a third party there, which is causing a little bit of embarrassment. But again, in terms of the New Zealand economy, it's pushing on at a reasonable rate. Obviously tourism is still suffering a little bit. The domestic tourists really can't sort of take up all of the slack left by international tourists. But again, sort of hoping that sort of Trans-Tasman bubble potentially a sort of end of March time might just come into operation. And that will be certainly a big boost for the New Zealand tourism industry and also the New Zealand economy at large. Obviously, the housing market's still pretty rampant out there, but we'd expect that. You've got limited supply, you've got increased demand, and you've still got record low interest rates. Despite what the finance minister may like to say in terms of trying to curb it, etc., it's very hard when you have limited supply, you've got increased demand and record low rates. Now, obviously, with those record low rates, that's obviously impacting savers. So if you are looking for income options, there are plenty of alternatives available out there. And call us on 0800 867 323 or go to the website www.bayfinancialpartners.co.nz for lots of interesting articles, and we look forward to speaking to you soon.